When the Fed changes its tone, the market doesn't react to what was done. It reacts to what might come next. And that's exactly where the strategic investor separates from the anxious investor. If you landed on this video, I'm Chad. I'm the host at Zero Markets, and our goal is to make sure you, the trader or the investor, are always alert to smart and strategic choices with your money. Every time the Fed speaks, the market stops to listen. But interestingly, many people hear and they misunderstand because the Fed rarely speaks directly. It signals, it tests the market. It adjusts expectations. And when the tone changes, even without changing rates, assets move, currencies fluctuate, and entire narratives shift direction. The question isn't what did the Fed say? The real question is what is it trying to prepare the market to accept? All right, think about it. With first point, tone is different from decision, and you need to pay attention to that, okay? The strategic investor understands one fundamental thing. The Fed's speech is a tool. Sometimes it hardens its tone to cool off the market. Sometimes it softens the message to buy time. Even without changing a single word in interest rates, just the tone already changes asset behavior. All right, the second point, the Fed looks forward. It doesn't look backward. It doesn't react to today's isolated data. It reacts to what it thinks might happen 6, 9, 12 months from now. When the tone starts getting more cautious, the market usually senses that the peak of tightening is behind us. And those who wait for official confirmation almost always arrive late. The third point, the market anticipates the strategic investor positions. The strategic investor doesn't try to guess the next decision. He observes the narrative shift. When the tone changes, sectors react differently. Growth assets breathe. The dollar fluctuates. The yield curve adjusts. It's not about trading the news. It's about adjusting exposure intelligently. So if you want to think like a strategic investor, remember this. When the Fed changes its tone, it's trying to guide expectations, not surprise the market. The game isn't reacting in panic. It's understanding the sign. It's positioning calmly. If this content helped you think more strategically about the Federal Reserve's role in the markets, subscribe right now to the Zero Markets channel. Because here we don't follow headlines. We understand the movement behind them.